Hello my dear students, I am your accountancy coach teaching class 11th, chapter number 11, accounting for incomplete records. This is our first part for this chapter. So without wasting any time, let us start. Accounting for incomplete records. Accounting records which are not strictly kept according to double entry system are known as incomplete records. As the definition is saying, records which are not maintained on double entry basis are incomplete. Sometimes we call it single entry as well, but this is not the right name for such kind of system. The book has said the same thing. Many authors describe it as single entry. However, single entry system is a misnomer because there is no such system of maintaining accounting records. It is also not a shortcut method as an alternative to double entry system. Students, you need to focus that it is not an alternative to double entry system. Whereas, when I talk about single entry or incomplete records, that means few of the entries are not recorded, or say few of the transactions are missing. That's why we are calling it accounting for incomplete records. Few small merchants like a shopkeeper whose turnover is like somewhere around 50-60,000 in 1 year, or a bit more than it or less than it. Those kind of shopkeepers deal with cash only. They do not maintain proper record of books, and because of this miscalculations or some mismanagements, we have to calculate the profit by those incomplete records only, and that is what accounting for incomplete records. For an example, under this system, records of cash and personal accounts of debtors and creditors are properly maintained, while the information relating to assets, liabilities, expenses and revenues is partially recorded. Hence, these are usually referred as incomplete records. Now, we will study features of incomplete records. It is an unsystematic method of recording transactions. Unsystematic means we are not recording every aspect of every transaction. Generally, records for cash transaction and personal accounts are properly maintained, and there is no information regarding revenue or gains, expenses or losses, assets and liabilities. Those small traders or any kind of merchants are maintaining records for just those people from whom they have to receive money and to whom they have to give money. But they are forgetting few things. What kind of profit they have made? Have they suffered with any kind of loss or not? They are ignoring depreciations. They are ignoring many kind of expenses. That's why such system of accounting for incomplete records is known as unsystematic, right? Then, personal transactions of owners may also be recorded in the cash book. As we know, business entity concept. Business entity concept says owner and business are two separate entities, right? But those small merchants who are maintaining account at single entry, or say who are maintaining incomplete records, may be recording their personal transactions in the business, which is not correct. So, in this chapter we would be studying how would we calculate profit and losses for those traders or merchants, right? We have different organizations maintain record according to their convenience and needs, and their accounts are not comparable. Those unorganized sectors are maintaining records according to their convenience, and the first and the foremost advantage of making accounting at the standard is comparability. Comparability means if you all are following the same standards, you can easily compare your accounts with other firms. Government can easily inspect those accounts. But if your accounts are incomplete, those are not comparable, right? To ascertain profit or loss, or for obtaining any other information, necessary figures can be collected only from original vouchers, such as sales invoice, purchase invoice, etc. Thus, dependence on original vouchers are inevitable. That means for every transaction, you want some evidence. But when you maintain incomplete records, you have to be dependent on the original vouchers. But if you see double entry bookkeeping, you have dual effect of each and every transaction. In that system, you are not dependent on the original vouchers. You can easily relate one transaction to another, one aspect to another. But it doesn't happen when it comes to accounting for incomplete records. Now, the profit or loss for the year cannot be ascertained under this system with high degree of accuracy. As the name says, this is incomplete record. So, how can you ascertain profit or loss accurately? So, this is also a feature or say disadvantage. Students, always remember, you can easily filter advantages and disadvantages when you learn features of any concept. Now, we are going to study what are the reasons of incompleteness. This system can be adopted by people who do not have proper knowledge of accounting principles. As I said, small merchants maintain incomplete records. They do not have complete knowledge of double entry. That's why they maintain their accounts their own way. That's why this is the only reason for the incompleteness of records, because they are small merchants and they do not prefer maintaining a scientific way, because the scale of business is too small to maintain a scientific way. They have very few transactions with them, so they do not bother. That's what the reason is for the incompleteness of accounting records. It is an inexpensive mode of maintaining records. They do everything manually. They do not use any accounting software. That's why the records are incomplete. Time consumed in maintaining records is less. When you maintain records manually, you do not follow any standard, so it is inexpensive, it is less time consuming as well. It is convenient mode of maintaining record, as the owner may record only important transactions. As a merchant is dealing with few transactions only, then he just record those transactions which are going to affect its profit or loss. He or she does not care for expenses like depreciation, personal expenses, etc. So, these all are the reasons for incompleteness of such system. So, students, I would like to compare this single entry thing with the double entry. If you people remember, in the last chapter you have learned financial statements. That means you were preparing trading profit and loss account. Why did you prepare P&L account? You prepared P&L account to ascertain profit or losses. Now, in this system, we will also calculate profit, but by a different way. Why a different way? Because we have incomplete records. We will have a statement of profit and loss. Let's see how does it look. It look like statement of profit and loss. As you can see, we have capital at the end, we add drawings, we less additional capital, we less opening capital, then we get profit or loss made during the year. Let me tell you how this formula is derived. As you know, the amount we invest from our own pocket to start business with is known as opening capital. Then whatever we introduce in between the year as capital is known as additional capital and it should be added. Then whatever the owner withdraws from the business for his personal use is to be deducted and that is known as drawings. Now, in case the owner or say business earns profit, it must be added, and in case he has suffered with a loss, it should be subtracted according to the situation, and the result would be closing capital, right? So, in order to calculate profit, use the equation. Profit will remain on LHS and rest of the things will be transferred from left hand side to right hand side. Closing capital is already on the right hand side. Drawings which were getting subtracted on LHS would be added. Similarly, additional capital will get the reverse treatment and subtracting opening capital, and that is how this formula is maintained. Profit is equal to closing capital plus drawings minus additional capital minus opening capital, and that is what is placed in the format of statement of profit and loss. Closing capital, add drawings, you can see closing capital, add drawings, less additional capital, less additional capital, less capital at the beginning, and it will give you profit. So, this is how statement of profit and loss is maintained for single entry or say accounting for incomplete records. It is different from double entry because we do not have all the things like financial statements. Clear, students? Let us understand this concept by an illustration. Let us understand this concept of statement of profit and loss by an example. Here we go. Capital in the beginning of the year, that is your opening capital 120,000. At the end of the year is 2 lakh. Capital brought by the proprietor, that is additional capital 50,000. Withdrawals, that means drawing 30,000. And we are supposed to calculate profit or loss earned by the proprietor. Let me recall you the formula. Closing capital plus drawings minus additional capital minus opening capital will give you profit or loss. Let's place all these things in the format. Capital closing, we have to start with the closing capital, and that is 2 lakh. As you can see, 31st March 2005. 31st March 2005 means closing date because the opening date is 1st April 2004. So, here I place 2 lakh. Then we have drawings to be added. This is withdrawal 30,000 added. Then we have to get additional capital, and additional capital is 50,000. It is to be deducted. 50,000 is deducted out of 230,000, which gives you 180,000. Then we have opening capital and it is to be deducted, that is 120,000, and the result is 60,000 and it is profit. In case we get this figure in negative, that means the proprietor is suffering with loss, and obviously if it is positive, that is profit. So, that is statement of profit and loss. I would like to repeat, this is not profit and loss account. It is statement of profit and loss account maintained by few transactions, drawings, additional capital and opening capital. We do not have proper records like what is my rent, what is my salary, etc. We have calculated profits just by adding and subtracting drawings, additional capital and closing capital, right? Let us understand few more things related to incomplete records. Students, we have one more thing, that is statement of affairs. And statement of affairs means balance sheet for incomplete records. You can't call it balance sheet because balance sheet shows the balances what we are left with at the end of the year, and those balances are calculated by maintaining a double entry system. But in single entry or accounting for incomplete records, we do not have double entry for every transaction. So, as the maintaining thing is incomplete, we have few things in our hand. That means we would have few assets and few liabilities, and we will calculate the amount of capital by deducting liabilities from assets, and we will frame a replica balance sheet, and that is statement of affairs. It can be illustrated like this. As you can see, Mr. Mehta started his ready-made garment business on 1st April 2004 with a capital of rupees 50,000. The question is clearly saying you that Mr. Mehta started business with 50,000. That is his opening capital. He did not maintain his books according to double entry system, and during the year he introduced fresh capital of 15,000. Whenever you get information, you all are supposed to just note down whatever question is saying. Mr. Mehta started with 50,000. So, this is opening capital 50,000. Then during the year he introduced fresh capital. That means we have additional capital also, that is 15,000. And now the question is saying he withdrew 10,000 for personal use. That means we have drawings as well, that is 10,000. Now we have few balances with us, and that is due on 31st March. When it comes to 31st March, that means it is my closing date, and closing date means the year has come to an end, and the balances are total creditors 90,000, debtors 125,600, stock 24,750, and cash at bank 24,980. And the question is asking me to calculate profit or loss. Students, when you have to calculate profit or loss, you have to make statement of profit and loss. And if you recall, how did you calculate profit in the last example? You had closing capital, you had opening capital, you had additional capital, you had drawings. But in this question, you do not have closing capital with you. So, how are we going to calculate that? So, the answer is we are going to maintain statement of affairs. That means we are going to deduct all the liabilities from our assets. And as you know, assets minus liabilities is nothing but capital. If you do this on 31st March, you would get closing capital. If you do the same on 1st April, you would get opening capital. So, recall the format of balance sheet you learned in your last chapter. The format is same: liabilities, amount, assets and amount. Now, I am going to place each and every balance at its place. The first thing was creditors. I placed it on the liability side. Then you had debtors. I placed it on the asset side. Then you had stock. I placed it on the asset side. Then you had bank. I placed it on the asset side. Now, I added all the assets and it gives me the total of 1,75,330. So, whatever the total of asset side is, the total of liability side should be the same. But we place just one thing, that is creditor. So, we are going to deduct this 90,000 from the total, which gives me 85,330. And this is my balancing figure. Assets minus liability is equal to capital. and that is why this capital is balancing figure 85,330, and you calculated it from the closing balances. So, this is my closing capital 85,330. Clear, students? Now, you have one more thing in your basket, that is closing capital 85,330. Now, we have sufficient things with us to calculate profit and loss. Clear? So, you can make a statement of profit and loss. Closing capital is 85,330. I would add drawings to it, which are 10,000. I would deduct additional capital, that is 15,000, and opening capital is also deducted 50,000. And if I calculate this, it gives me 30,330, and that is what your profit is. And this is the treatment of the balances in the statement of affairs, and I use the final figure from statement of affairs. So, this is how you use the balances in statement of affairs. The figure you received from statement of affairs was treated as closing capital to get profit and loss. So, students, you will find similar kind of questions in your textbook. So, you all are advised to practice the same, and we will meet up soon for the second part of the same chapter. Thank you very much.